Hello everyone, welcome back to the channel. CBDT has issued a very important circular dated 4 June 2026, laying down the compulsory scrutiny guidelines for financial year 26-27. Now, this is not the normal cash scrutiny that is selected through data analytics and risk parameters. These are cases where scrutiny becomes mandatory, and once a taxpayer falls into any of the specified categories, the income tax department has no discretion to skip the case. In today's video, I will explain what compulsory scrutiny means, the 6 categories notified by CBDT, how the selection process works, special provisions for international taxation cases, and the most important deadline that every taxpayer and tax professional should remember. So, let's get started. What is compulsory scrutiny? Before discussing the 6 categories, let us understand the concept. Normally, returns are selected under CAS based on risk analysis, data mismatches, AI based analytics, and various parameters. However, compulsory scrutiny is different. Under these guidelines, if a return falls under any prescribed category, it must be selected for scrutiny under section 143(2). This is rule-based, automatic, non-discretionary, and applicable irrespective of taxpayer's risk profile. In simple words, even if your return is perfectly filed, if you fall into any of the notified categories, scrutiny is unavoidable. Now, let's discuss the 6 parameters one by one. The first category is survey cases. If a survey under section 133A has been conducted on or after 1st April 2024, the return will be compulsory selected for scrutiny. However, surveys conducted under section 133A-2A are excluded because those situations are generally linked to search proceedings. This selection is carried out by the Directorate of Income Tax Systems. The takeaway is very simple. If your business premises were surveyed after 1st April 2024, scrutiny is almost certain. Now, parameter 2. Search and raid cases. The second category covers search and raid cases, whereas search under section 132 or requisition under section 132A has been conducted on or after 1st April 2024, compulsory scrutiny applies. An important point here, for searches conducted on or after 1st September 2024, special block assessment provisions under section 158BA may apply. Therefore, taxpayers facing such action should be prepared not only for scrutiny but potentially for complete different assessment mechanism. The third category relates to reassessment proceedings. If a notice under section 148 has been issued, the case falls under compulsory scrutiny. There are 2 situations: search or survey related reassessment cases. These are generally handled directly by jurisdictional AO. Other reassessment cases, these are generally routed through faceless assessment framework and completed through NaFAC. A key compliance requirement is that the assessing officer must upload the documents and information forming the basis of section 148 notice. Now, parameter 4. Trust and NGOs with cancelled registration. This category is extremely important for NGOs and charitable institutions. Compulsory scrutiny will apply if registration under provisions such as section 12A, 12AB, 1023C or similar provisions was cancelled or rejected on or before 31st March 2025 and the entity still claimed exemption while filing ITR 7. Both conditions must be satisfied. However, if the cancellation has been reversed in appeal, then compulsory scrutiny will not apply. For tax professionals handling NGO clients, this is an area that requires immediate review. Now parameter 5. Recurring additions. The fifth category covers recurring additions. Here, scrutiny becomes mandatory when significant additions made in earlier years have either become final or been upheld in favor of the revenue by appellate authorities. The monetary threshold is metro charges. Ahmedabad, Bangalore, Chennai, Delhi, Hyderabad, Kolkata, Mumbai and Pune. Addition exceeding 50 lakh. Other charges. Addition exceeding 20 lakhs. This category also includes transfer pricing disputes. The idea is straightforward. If substantial additions are repeatedly sustained against a taxpayer, the department wants to closely examine future returns as well. Now the last parameter, tax evasion intelligence. The sixth and final category relates to tax evasion intelligence. Compulsory scrutiny will apply where specific information regarding possible tax evasion is received from the investigation wing, intelligence units, regulatory authorities or similar agencies, and the taxpayer has filed a return for that year. Now here comes an important relief. If a return was filed merely in response to notices generated from AIS, SFT, NMS or CPC TDS information, that does not alone qualify for compulsory scrutiny under CS06. This exclusion is particularly beneficial for taxpayers who have only AIS mismatches and no specific intelligence input against them. Now, let's quickly understand how the process works. Step 1. A return is filed. Step 2. The system checks whether any of the 6 parameters apply. Step 3. The case is selected either automatically or through the prescribed authority. Step 4. Notice under section 143(2) is issued. Now step 5. Assessment is completed either through NaFAC or the jurisdictional authority. Most cases will move through the faceless assessment route. However, there are important exceptions which we will discuss next. For international taxation cases and central charge cases, the 6 scrutiny parameters remain exactly the same. However, NaFAC does not handle these cases. Instead, prior approval from the competent authority is required. The case remains with the International Taxation Officer or Central Circle. Communication takes place directly through the concerned jurisdiction. This is particularly relevant for NRIs, foreign companies and cross-border taxation matters. Now let's discuss the most important point of this entire circular. The deadline for issuing scrutiny notices under section 143(2) is 30th June 2026. This is a hard statutory deadline. If a notice is not served by this date, the department loses the right to select the return for scrutiny for the relevant year. Therefore, taxpayers, consultants and chartered accountants should closely monitor developments. Before 30th June 2026, tax practitioners should focus on 3 key areas. First, identify at-risk clients, including survey or search cases, clients with pending Section 48 proceedings, and NGOs or trusts facing registration issues. Secondly, ensure documentation readiness. Gather supporting documentation for AIS and SFT transactions. Keep appellate orders handy for recurring addition cases and reconcile ITR, AIS and Form 26AS data. Third, prepare your response strategy. Keep draft replies ready for possible Section 143(2) notices and proactively address pending compliance issues. Remember, 30th June 2026 is the last date for issuing Section 143(2) notices for FY 25-26 returns. Early preparation can significantly reduce scrutiny-related risk. To summarize, CBDT has prescribed 6 compulsory scrutiny categories: survey, search, reassessment, cancelled NGO registrations, recurring additions, and tax evasion intelligence are the major triggers. International tax and central charge cases remain outside NaFAC. And most importantly, 30th June 2026 is the crucial deadline for Section 143(2) notices. If you find this video useful, please like the video, subscribe to the channel and share it with fellow tax professionals. If you have any questions regarding scrutiny selection or the new income tax provisions, mention them in the comment sections below. Thank you for watching and I will see you in the next video.